Our final company this morning, before we break for refreshments, another familiar face here, Brad Cook, who's the Chief Executive of Endeavour Silver. They have 3 producing mines in Mexico and are developing 2 more, and have a guidance, I think, of about 9 to 9.8 million ounces of silver equivalent this year. Brad.
Thank you very much, Paul, and it's great to be back here at the Denver Gold Forum. For those of you who were here last year, you may recall it was quite a different atmosphere, and almost invariably, the mining companies were asked 2 questions last year. What is your balance sheet, and what are your operating costs? I'm pleased to say that Endeavour has emerged from the bear market stronger than ever, with a balance sheet of $78 million cash today, and having beaten our all-in sustaining costs down below $11 per ounce in the first half of this year. So 2 big check marks on last year's concerns. Before I launch into the presentation, we are a paperless conference, so I just want to remind you that the presentation is available, either hard copy or on memory stick, if you'd like to pick one up from our Director of IR, Meg Brown. She's here in the audience today. So, the segue from last year to this year is from survival to growth, and Endeavour is one of the best positioned companies in the silver space for 50% growth over the next 3 years. So without further ado, let's get into the presentation. I will be making some forward-looking statements today, so you are duly cautioned. And by way of introduction, we are now a 12-year-old company. We're a mid-tier precious metals producer. As Paul mentioned, we're guiding 9 to 10 million ounces of silver equivalent production this year, of which about 5.5 is silver, and the balance is 50 to 55,000 ounces of gold. We have 3 core assets, 3 producing mines, high-grade underground silver-gold mines in famous districts in Mexico. The way you can identify Endeavour apart from the silver peer group is, I think, in 2 or 3 ways. We have obviously developed a track record for operational excellence, tackling challenging assets and turning them into high-quality core assets. This will be our 4th consecutive year of driving down our operating costs. In the same way, we live and die by the drill bit, so we typically buy mines that have no reserves and resources, and we have a track record of finding, through brownfields exploration, virgin high-grade ore bodies hiding below surface in historic districts and fast-tracking their development to production in order to initially get back to plant capacity and ultimately to expand the plants. And we've done that at each of our operations. From time to time, we make strategic acquisitions. Earlier this year, we acquired the El Compass mine in Zacatecas, and last week we acquired the Parral mine in the district of Parral. So our focus is clearly on organic growth. We have one of the best organic growth profiles in the sector, proposing to build 3 mines in the next 3 years. So the core assets are all located in Mexico. Our first asset, the Guanaceví, we purchased in 2004 in the northwestern Durango. Second asset, Bolañitos in central Mexico, Guanajuato. Third mine in 2012, El Cubo, also in Guanajuato. And the 3 development assets that will be developed over the next 3 years. Up next, El Compass will be in production next year in Zacatecas, to be followed by Terronera in 2018 and Parral in 2018-19. So 3 mines operating, 3 mines to develop. Quick look at our operating results. We had a great first half. We produced well above our operating plan for the year. As a result, we increased our production guidance. We're well below our target costs for the year, with all-in costs in the first half of $10.82 per ounce of gold, per ounce of silver net of the gold credit. We did strengthen our balance sheet in the first half, adding $39 million through an ATM equity financing. And as of August 31st, we were at $75 million cash. Today, we're closer to $80 million cash. We acquired the El Compass mine in the first half, the Parral mine in the second half, and we found a bunch of new veins at Terronera. We enjoyed 8 years of robust resource growth, and we found all of those ounces. We did not buy them. We obviously went flatline with the reduced spending during the bear market, but that kind of resource growth allowed us to drive 9 years of consistent production growth, only flatlining in the last 3 years of the bear market. I already touched on costs. There's 3 charts here on the right-hand side, the blue charts. If you look at either cash costs or all-in sustaining costs, both have come down by half in the last 8 quarters. Compared to the rest of our peer group, we are still considered cheap by enterprise value. Top chart, enterprise value per ounce of resource. Bottom chart, enterprise value per ounce of production. And we're also one of the best leveraged silver producers. We don't produce copper, lead, zinc. We're basically a silver and gold producer, about 60-40 value split. We have a strong one-year beta and the best bested sector beta to the silver price over 3 and 5 years. Great strong share performance this year. Not the best in the group, but certainly up 400%. Nobody's going to complain about that. 126 million shares out, dual listed on the New York Stock Exchange in Toronto, and well-financed. Quick tour of the assets. Guanaceví, our first asset, is basically steady state at 1,000 and 1,200 tons per day. It's the only mine in the group currently operating below our plan for the year, both on production and costs, but we do expect to play catch-up in the fourth quarter and meet the bottom end of our guidance for Guanaceví. Moving to Bolañitos, this was acquired in 2007 and has consistently been our most profitable mine in the group, continues to be so today. It's well ahead of its plan this year on both production and costs, and if you look at the cash costs and all-in costs, they're negative because the gold we produce here exceeds the total cost to run the mine, and the silver is essentially free. Moving to El Cubo, this was perhaps our biggest challenge. We bought it because it had synergies with Bolañitos in the district of Guanajuato, and it was a troublesome mine under the previous owner of super high costs. When we bought it, the costs were 42 bucks an ounce. Silver was 38, so we figured, well, you know, we recognize how to get it back down. It took us 3 years. Just over, but I'm pleased to say that in the first half, this mine generated the most free cash flow amongst our group of mines. And we had the all-in cost down to 12 bucks an ounce this year. The top chart there, cost per ton, shows a decline from a peak of $132 per ton in 2013 to $74 a ton in Q2 of this year. So great improvements at the site, and it's now making money. Moving to the development assets, El Compass is next up, and we bought this in May. It's a clone of our Guanaceví Bolañitos business model. It was a low-cost acquisition, $6.7 million in stock. We actually expect to generate that every year in free cash flow. It's a large property in a major district, very well located, road accessible, it's on the power grid. Small-scale historic production, and there's 3 ways we can make this project bigger and better. As it is today, it'll be a short time frame, small, high-grade, low-cost mine producing 1.2 million silver equivalent ounces per year by the end of next year. But that's not our vision. Our vision, just as it was at Guanaceví and Bolañitos, is to see how fast we can scale it up, because the exploration potential here is very exciting. We have a dozen untested targets as well as 2 ore bodies ready to go. And so one way to make this project bigger and better is through exploration to new discoveries and growing resource base. Another way to expand this operation is that this district of Zacatecas is a big district, over 700 million ounces of historic production, over a 10 by 5 kilometer area. And there are a number of junior companies and Mexican families who are now ready to part with their properties, some of which have historic veins, mines, and resources. So through consolidation, we do expect to add other producing mines to the Zacatecas unit. And last but not least, because the mine is already permitted and the plant we've acquired is already built, permitted, and leased, there's a very quick time frame to cash flow here. Less than a year, less than 10 million capex, and budgeting a margin of at least 50%. In other words, on a gold equivalent basis, if gold's 1,300 bucks, we think we can bring this mine on with an operating cost at around 650. So a very exciting opportunity for us. We're going to the board with a preliminary economic assessment for a production decision at year end. We'll publish the results of that in January. We've already interviewed the mining contractors for the mine development, and this slide is just a reminder that the mine is already permitted. So in the white line, you see about a 300-meter ramp to decline into the first pink ore body at El Compass. We'll do 300 meters of lateral development, and then we'll start producing ore to the plant next year. The yellow line is the power grid, the surface roads in the green, and the blue and red are the design for the surface buildings. And the plant is already built. It's a government plant, 4 years old. It was sitting there dormant for 2 years. We took a 10-year lease on it, very cheap lease rate. It's to build it would be like 15 million bucks, and over 10 years, we're not even going to come close to a tenth of that in our rental payments. El Compass has multiple exploration targets. You see them highlighted here in the blue circles, and the 2 ore bodies ready to go have been defined by 156 drill holes, some of the drilling shown in the chart. And if you look at the gold numbers, yes, 239 grams, 193 grams. We have some very high-grade VG areas in this system. Moving on to Parral. Parral we just acquired last week, so it's a year behind Compass in the development pipeline, but it's exactly the same concept. It was a low-cost acquisition, $6 million in stock, large property, major district, well located, drive right up to it, historic production. This was an old IMSA mine, Grupo Mexico mine. 3 main veins up to 40 meters thick, 8 kilometers long. Historic resources that we inherit in this transaction, 32 million ounces, of which 15 million ounces sit in a virgin zone running 300 grams over 5 meters starting at surface. That will be our first mine. It's called the Veta Colorada mine, and you can see it here on the map. Great metallurgy historically and in the testing. And again, like El Compass, we can grow this in 3 ways. There are 3 500-ton plants starved for feed operating within 10 kilometers of Veta Colorada. They all want our business, or we would prefer to either buy or lease. We'll probably go with lease with an option to purchase. So just like El Compass, we've got great exploration potential here. There are other opportunities to consolidate historic resources in the district, and like El Compass, we can see quick cash flow here. This is just a shot to confirm some of the exploration potential. Each of the 3 areas on this map are 3-kilometer-long vein systems on which what the orange and pink symbols are high-grade surface samples with virtually no drilling. So lots of places to make new discoveries. Last but not least, the sweetheart in our development portfolio is Terronera. This is a virgin discovery, perhaps the most exciting high-grade silver find in Mexico in the last 10 years. Not since Mag Silver have we seen an entire district emerge with high-grade veins. We own the entire district, and the first ore body in the Terronera vein is about 1 kilometer long, 350 meters deep, 6 meters thick, still open at depth and to the southeast. There's about 50 million equivalent ounces already defined in that ore body, still wide open. 50 million ounces, that's enough to get started and have some cash flow. So we're in a PFS now for delivery to the board at year end. What we hope to deliver is a feasible, permitted, financed project. We also released at the end of the second quarter sampling from 9 new veins to the north of Terronera. The one at the bottom of the map is actually the Terronera ore body. So let me just see if I can get this working. There we are. So there's the 1 kilometer ore body containing 50 million ounces. And look at this corridor of high grade crossing 9 veins. We now have 9 more shots at ore bodies, 10, including Los Reyes. So we're very obviously keen on the upside potential at Terronera. We think the resource will grow here by multiples. And where are we at? Well, we already have purchased the land for the mine plant and tailings. We have the long-term land access with the Ejido for exploration. We're in the middle of our step-out drilling. We've completed our infill drilling. We're doing the trade-off studies. And like I said, we're going to go to the board for a production decision this year. So to wrap up, we have a lot going on. We're getting busy in a bull market, and the real value drivers going forward this half are to meet or beat our new production guidance, to deliver below our cost guidance. We're building a new mine at Guanaceví. We're developing a new ore body at Bolañitos. We've already ramped the production at Cubo back up to the plant capacity. And I think as a geologist, most exciting, you're going to see a stream of drill results here in the fourth quarter from 3 different projects, followed by 3 different resource studies and 2 economic studies. So that's the Endeavour story in a nutshell. When you buy Endeavour, what you're getting is an experienced group with our own proven track record, making strategic, acquisitions of admittedly small mines in historic districts, but turning them into quality core assets. We live and die by organic growth. We're strong financially. We have excellent liquidity, trading over 3 million shares a day, and we're one of the best leveraged silver producers in the group. Thank you very much.
Thanks, Brett. Are there any questions for Brett? Roger.
Brett, thanks very much.
Sorry, just use the microphone for those on the web.
Thanks very much, Brett. Your enthusiasm is sure infective. What are your capital requirements for the next year or so?
Well, cash flow now is obviously covering all of our sustaining exploration and development, and then some. So our cash balance has been growing through the year. But the primary spend, obviously, is the 3 growth projects. Compass and Paral, being less than $10 million each, will come out of cash and cash flow. And Terronera will most likely be some form of debt facility. And we'll test the waters on the debt markets later this year. And we haven't published what the CapEx will be, but it'll be a 2-phase construction to produce initially 3 million ounces a year, and then after phase 2, 6 million ounces a year. Phase 1 might be 60, 70 million CapEx, and another 20, 30 million on the phase 2.
Any other questions? Okay, many thanks, Brad.
Lovely, thank you.